This is my review of the market activity and my own trading for the third week of December 2024, and I did not have a good week. I took six losses straight, 6 or 7 losses, all on the same instrument, GBP USD. They were all sales, and I lost every single one of them. I lost a little over 3% this week, and I was already down a little over 3% from the first two trading weeks of December, bringing my total drawdown now to about 6% on the account, which is a shame because I was doing quite well on the account. Let me take a second to open the dashboard. I was doing quite well on the account. I was down 6% when my trading habits weren't really the best. I wasn't enforcing my rules as diligently, and I went down 6%. But with two bumper trades, this trade right here and then this trade, I came back to break even. And then you can see that on the next trade that I took, this blue line represents my equity. I was up almost 2% at a point on that trade. But because when you're doing a challenge, you're holding for a particular target, you're not taking profits, that can happen reverse, and I ended up losing the trade. So you can see that throughout, I've had trades that were in a bit of profit, wasn't a bit of profit, wasn't a bit of profit, but my equity is not my balance, and I was not able to close those trades profitably. You can see that the whole of December, I've just taken a series of terrible trades that have brought me right back to where I was on the 15th of November. I'm down, you see, 6% on the account. So I only have 4% left to lose before I end up losing this 25K funding traders account. Now, I'm trying to figure out what I need to do to make sure that I never have a repeat of the sort of performance that I put out last week. It's absolutely unacceptable taking six losing trades on the same instrument and in the manner that I did. So I wouldn't mind taking six losing trades back to back as long as I could beat my chest that every single one of those trades was a trade that made sense to take and that I could not have optimized to not take. Now, that's not to say I did not have reasoning for the trades that entered this week. I had reasoning for all of them, but I feel like a little tweak of my rules could have saved me from taking some of the terrible trades that I took this week, and I want to dive into it. So, all the trades were taken on the pound, dollar, and this is what happened this week. Now, you can already see this is a daily fair value gap, and when you see this sort of price action, this was Monday's candle, traded into it, closed bullishly, but you see there is a wick at the top. The next day, instead of respecting and continuing to the downside, traded higher still, overlapped the fair value gap, then closed bullishly. And then it was not until the next day, this huge bearish candle where FOMC came out. And this happened at night when FOMC came out. So there was no way to take advantage of this bearish volatility. The fair value gap did hold. Yes, it held, but unfortunately for my style of trading, did not give me the opportunity to make any money on short trades. So I was correct about the bias, but when a fair value gap holds like this, it's very annoying. Now, just for context, to show you the kind of fair value gap rejection that I like to see. You see this, on the other hand, you see how this candle traded into it and this low was no longer violated. Every other candle respected the fair value gap and respected the low that was put in when this candle traded into the fair value gap and traded away from it. That is the type of fair value gap respect that I like to see. There's another example right here where we can see on this fair value gap, this one over here, price traded into it. You see this candle with the long wick respected it. Every other candle after that respected the high that was put in when price traded into the fair value, and they all traded lower. None of them violated this high. That is the sort of fair value gap respect that I like to see. When you see that type of fair value gap respect, that's when I take winning trades. But if you have this type of price action where the first candle trades into it, has a wick, second candle disrespects it, just does nonsense, trades through it. You see that at no point was the fair value gap traded through this example I gave. But when price trades through the fair value gap, and then eventually ends up respecting it because of from some freakish year's event, It usually does not bode well for my type of trading. Does not mean the price action did not do what I was expecting it to do, just did not give me an opportunity. So, all things considered, it was a week in which I was bound to lose. I'm just not happy with how much I lost and the manner in which I took the losses. If we go down to the 4 hours, so the first, I think, four losses I took inside this fair value gap area. Now you can see on the 4 hour how messy the price action was. When price traded into it on Monday, you would think this candle was going to respect it. You think this candle, you think this candle, you think this candle. All these highs, you see how it's just created basically relatively equal highs here from this point, and then ended up violating all of them. Even the candle that ended up violating them, this candle, still had its high taken out here, and this candle still had its high taken out here. It was not until this point where look at all of this nonsense price action. There was no way of knowing whether this fair value gap was holding or whether it was going to be traded through until FOMC came out and did this. So this was where most of the damage that was done to me during this week happened. If we go down to my entry time frames, this was the trading that I did. This is the loss I took on Friday. I took two losses on Friday. I'll come back to that for the total six losses. So when price first traded into this daily fair value gap here, what's wrong with my laptop today? It's been slow recently. It has updates that it's been trying to force me to install that I don't want to install. Anyway, so what's this? Price traded into the fair value gap here. So this was Monday's price. This was this Monday or Tuesday? Okay, this was Tuesday. This was Monday's price action. So this was where I took the first loss. Now you can see here, price traded into the fair value gap here during London close kill zone on Monday. If I zoom in a little more, we'll see that this candle right here, this candle engulfed this previous candle, was a bearish candle, had a wick to the upside, engulfed it, and then closed below this candle's low. So I took my first short trade here, put my entry on this candle's open, put my stop above this candle's high, and I was targeting this low. But you can see that throughout Asia and that same day, just consolidated for a bit, created relatively equal highs, took me out for a loss, and then Asia traded lower. Now the following day there was pound news that came out, spiked it up. Now we can see that taken after having taken me out, price created these relatively equal highs, right? Created these relatively equal highs that continued all the way into Asia. Now that's what I like to see. The mere fact that you're wrong on your first trade idea in any higher time frame, point of interest does not mean that the trade idea is invalid. Does not mean that that point of interest isn't going to hold. It just means that your timing was wrong and the entry signal that you saw didn't play out. So when price created these relatively equal highs still inside the bearish fair value gap, traded through them, and you see that after this candle there was this huge bearish candle that essentially engulfed it. Around this point, I saw the trade opportunity and I entered the trade. Now, this was my target. My target was at least this low. And because I was expecting the bearishness to resume, I was pretty confident that even this low was going to be reached. But what do we see now? That would have been a 7 hour trade. I'll probably not have held to them. But I was sure that at least Asia lows, or the lows that were created before the news were going to be taken out for a 3.9 for essentially a 4 hour trade. Now, what did price do? Price gave me as much as a 3.3 hour trade, but reversed against me, took me out for a loss. Now, at this point, if you've taken two losses in the same point of interest, right, this is where it becomes subjective because you might take the next trade and it will play out. But if price is refusing to do what you're expecting it to do under the right conditions, so first trade, loss, second trade, give a bit of a reaction. If I had taken the 3 hour, yeah, I would have had a profitable trade. That's another thing that is sort of good and bad about my trading style. It's that you can count on at least the reaction. So you probably get a 2 hour or a 3 hour, even if price is not ready to fall off in the direction that you actually anticipate. So maybe that's something I'm going to do. Maybe I'll start taking, but you see, I use liquidity as my target. This isn't very far away. How much was I truly asking the market for? I was asking the market for what? 30, 40 pips, right? There is no reason for this move to not have happened, for this low to not have been taken out. So even this second loss, I would say was fine. But you see, this third loss now, after price took me out here, took out this high, this engulfing candle, this was the reason that I thought, okay, there's another trade here. When price started trading back up after news came out, I took this trade, put my stop here, and I was anticipating price getting to these lows because when you see price does something like this, prints this low, doesn't take it out, prints this low, as far as I'm concerned, especially if my trade idea is still intact. It's just engineering, trend line liquidity so that it can eventually be taken out. I was right about that as well, but I was wrong about when it was going to happen because it was not until FOMC on Wednesday that price eventually did what I had been anticipating it to do. That was here. So price traded into my daily fair value gap, consolidated, took me out. So I've taken a third and a fourth loss here. I think I took two losses in here because I got emotional or something like that. So it took me out. I ended up taking four losses in this bit of price action. From Monday when price first traded into it here till Tuesday, and then Tuesday morning, and then Tuesday afternoon, I took two losses in here. I can't remember the exact entry. So this bit of price action cost me 4R, and that was 2%. Now, when FOMC eventually did what it wanted to do all along, this blue zone here is a fair value gap that was created. Now, I was anticipating that price would trade into this fair value gap and continue trading lower because you see price broke, came up here, broke lower, came up here, broke lower. So Friday I was anticipating price to trade into this 4 hourly fair value gap, then continue to the downside. Especially because, and if you go to Euro USD, what do we have here? You see, we have relatively equal lows that have been created here next to this low that was created inside this monthly fair value gap. So when you have this sort of thing where price rallied away from that point, but the price action was choppy. This is the 4 hour, by the way. So price really struggled to, maintain the momentum that it used to trade away from this monthly fair value gap. And we see price start coming back down. At this point, price has retraced how much? At this point, price has retraced almost 100% of the way. So if, so for a healthy trend, even if price had done all of this retracement from 75% from this point, you would think that if this bullish impulse is going to continue, price should, at least from the 75% points, begin to rally away. But the moment you have price coming 90, 91, 95, almost 100% of the way, it's no longer really a retracement. It becomes more of a reversal. At least for price to test this low inside the monthly fair value gap. Because, and if we zoom out, you can see that it is a massive monthly fair value gap. It's a huge monthly fair value gap. There's still so much, you see. There's still so much liquidity, that can be tapped into here. I still firmly believe that these lows are going to be tested and the price is going to come back down here. It's just whether or not the market is going to give me an opportunity to take advantage of the price action that I anticipate. So at the time when price was trading into that 4 hour fair value gap on Friday on the pound dollar, price was heading close to this daily fair value gap created on Euro USD. But price did not tap into the daily level. I wanted this high to be taken out and for price to tap into the daily fair value gap at the same time that price was tapping into the 4 hour fair value gap. But price did not do that. At the time, price was somewhere here and it gave me my entry signal on the 4 hour on the pound. Now, if you are familiar with smart money technique, you know that sometimes there's a crack in correlation where you're expecting a higher high to be formed, and then the higher high is formed on one instrument and a lower high is formed on the other instrument. So there are times when price will tap into, for example, a 4-hour fair value gap on the pound dollar without having tapped into the daily fair value gap on the euro dollar, and price will begin to sell from the 4-hour fair value gap on the pound dollar, and price will begin to sell on the euro dollar without having touched the daily fair value gap. It's very possible. And my trading tells me you take the trade on the setup, on the instrument where the setup has formed. So if the 4-hour on pound is telling me sell, the mere fact that there is a daily fair value gap above price on a different instrument, euro dollar, that has not been tapped into, I'm not going to avoid taking the trade because I'm like, I need euro dollar to tap into the fair value gap, especially as I'm not trading the euro dollar. So this was what happened. Price traded into it. Now you can see this was my first entry. This candle, this doji candle printed, and then after that doji candle printed, this next candle engulfed the doji's body, closed bearishly. So this was the first trade that I took, and I was targeting these lows. But what do we see happened immediately after I took the trade? Price just consolidated, went nowhere, did nothing, took me out on this candle. But shortly after that, look at what price did. After it took me out, it then printed this huge bearish candle. Again, the mere fact that what I'm anticipating does not happen at the first entry does not mean that I give up on the trade idea. So when this huge bearish candle eventually printed, proper engulfing candle, still within the time period that I like to see, I took this short trade. Price did not even continue that bearish momentum in the least bit. Price just took me out immediately. So I ended up taking two losses. Now, in hindsight, I'm thinking, could I have done anything about this trade? Should I just have taken one? But it would have hurt me if, after taking this loss, this candle printed, I did not take the trade and price fell off. I would have been livid with myself. So I don't think there's anything I could have done about these two losses here. The only thing is, the correlation with euro dollar, where so when price eventually did all of this, took me out and continued trading higher beyond the 4-hour fair value gap. It was at that point that on the euro dollar, price eventually traded. So this was, you see this bit of bearish price action here, right here. This is what was happening at the same time when price traded into the 4-hour fair value gap on the pound. You see, it had not yet tapped into the daily fair value gap. So I thought, it doesn't need to tap it. Sometimes, price just comes near your point of interest and continues rolling lower. What happened was, when as I was taking those two losses on the pound dollar, price was trading higher on euro dollar and eventually traded into the daily fair value gap. But by this time, this is London closed kill zone. So all of this happened outside market hours. Price just, did nothing. Even if you had tried to take this trade, still could have taken you out for a loss. That's why you don't trade outside market hours. And eventually just closed near the highs. That's what happened to me this week. What can I learn from it? There are two things. In two of the trades that I took on the pound dollar this week, I was up 3R. The first one was this trade right here, which was the second trade that I had taken after the first loss. For the first loss, there was nothing I could do. Price didn't give me any profits, just took me out. But on this trade, where I did see a bit of profit, although I was doing the right thing in holding for my profit target, which was this low. My profit target was this low. Although I was doing the right thing, I ended up taking a loss on a trade that could have netted me better than about 3R. What I'm asking myself now is, should I take profit at 3R regardless of what my target is, regardless of whether the liquidity that I'm anticipating has been swept? What this means is that I will never take the 5-hour trades that nets me $1,000. I'll never take the 4-hour trades. I'll never take those 6-hour trades. I will always only take 3-hour trades. It might improve my win rate. I don't know if it will do that significantly or not, but this is the sort of thinking that has been going on in my head, because if I were to modify my trading at this point where I took 3R, where I took this loss, I could have been up 3R in this bit of price action as well. Now, this was an emotional trade. This was the only trade this week that I think I should not have taken. news was coming out. So I went down on the 5 minutes. I had a pretty good entry as well. My entry was on this candle as it was trading slightly higher here. I think I entered somewhere here. And as price was trading low, I did see 3R on this trade as well. But in the grand scheme of things, I was holding for this low to be taken out at least. And then it took me out again. There was no reason for me to enter this trade actually, because after taking this loss and when the news came out, I should not have forced myself to jump back in. So maybe that's another rule I'm going to implement, where if I take two losses on the same trade idea, now it does not have to be in the same session, right? It's just the same trade idea. So for example, the previous day I had taken the loss here, second day I took this loss here. If I take two losses on the same trade idea, I abandon it, whether or not it eventually does what I'm anticipating it to do, like it did with FOMC here. I don't want to be involved in price action where price gets into my point of interest and just dances around, for hours. And now, I've also learned something new where maybe I won't expect so much from price if there's a major news release like FOMC about to come out the following day. So maybe even if price gives me an entry, even if price trades to my point of interest, because FOMC is coming out, maybe I'll just avoid taking trades a day, 2 days ahead of FOMC, because my first entry was on Monday, right? Second entry was Tuesday morning. FOMC was not until Wednesday night. So I don't know if that is enough to warrant changing my trading, but I just hated my performance this week so much that there are so many questions going on in my mind. Of course, I will answer these questions by myself. I think the course of action I'm likely to implement this quickest is I'll take 3R. I'll just take 3R, regardless of where the liquidity point is, regardless of what I'm targeting. I'll just take 3R. I think that's the only thing I'm going to do. I'll still take trades ahead of FOMC if I get it set up well ahead of it. I'll still take trades ahead of CPI, still take trades ahead of NFP. I think I'll just take 3R. It means I'm not getting those 5 hour, 6 hour trades, but trades like this that could have been winners will stop being losers and actually end up being winners for me. That's my review of my trading and the price action of this week. It's December as well, so yeah, trading conditions may not be great. Going into the following week, the next week, which is Christmas, we'll see.